Good morning, everyone. It's great to be in India. This is my third time here in less than a year, which means I've traveled to India more times than any other country as Treasury Secretary, and I'm very glad to be back. I'd like to first thank Finance Minister Sitharaman and the Indian delegation for hosting the G20 Ministerial. Ahead of the Leaders' Summit in September, this week's convening offers us an opportunity to take stock of what we've done and to redouble our efforts to strengthen the global economy, support emerging and developing economies, and tackle global challenges. I'm looking forward to our meetings over the next few days. As you know, I traveled to China last week to meet the new economic leadership team in place in Beijing. During meetings with my counterparts, I emphasized the importance of both countries working together on the global challenges that face us. As the world's two largest economies, we have an obligation to the people in our nations and in the world to cooperate on areas of mutual concern. Last week's visit served as a step forward in putting our relationship on a surer footing and establishing a resilient and productive channel of communication. There's much more work to do, but I believe this trip was an important start. I'm eager to build on the groundwork that we laid in Beijing to mobilize further action. Today, I want to speak about 4 priorities we will focus on this week: debt distress in emerging markets and developing countries, multilateral development bank evolution, support for Ukraine, and the global tax deal. First, let me speak about how alleviating debt distress can stimulate growth and development and restore stability in emerging markets and developing countries. As you know, I've pushed hard, both in public and in private, for timely debt treatments for countries in need of relief. Over the past few years, we have seen debt vulnerabilities mount for many countries as a result of the pandemic and Russia's illegal war against Ukraine. Today, over half of all low-income countries are near or in debt distress. This is double the share of countries that were in this situation in 2015. The economic case for decisive action is clear. When countries find themselves in debt distress, it's hard for them to fund or attract important public and private investments. Without these investments, their macroeconomic foundations deteriorate, making the initial debt problem even worse. Further, with debt service absorbing resources, less is available for essential public spending, such as education or health care. Restoring debt sustainability can help unlock the massive economic potential of developing nations. It can help them regain lost growth and development and enable them to make investments to address challenges that we're trying to tackle together. When these countries develop and contribute to the global economy, all of us benefit. This week, I will continue to push for full and timely participation of all official bilateral creditors on pending debt restructuring cases. I was pleased by last month's progress on Zambia, which I discussed with my Chinese counterparts last week. The Zambia agreement took too long to negotiate, but it shows that creditors can overcome differences and agree on common principles for debt relief. We should apply the common principles we agreed to in Zambia's case in other cases, rather than starting at zero every time, and we must go faster. Our hope and expectation are for Ghana and Sri Lanka's debt treatments to be finalized quickly so that the IMF can move forward with their first program reviews by this fall. I believe that the publication of a user guide for borrower countries can provide necessary clarity and predictability about the debt treatment process. This includes elucidating the principles that all stakeholders agree to adhere to in debt restructuring cases. More broadly, I look forward to working with my counterparts to support macroeconomic stability and growth around the world. The International Monetary Fund plays a critical role through policy guidance. It also plays an important role in providing concessional financing to the world's poorest countries to support reform efforts. The IMF's Poverty Reduction and Growth Trust, the PRGT, is a key facility that currently provides zero interest rate loans to the poorest countries. The PRGT is especially important today as we navigate a complex economic environment. Low-income countries are under significant financial strain, and in many cases, they are seeing stalling or backsliding on important development outcomes. But the PRGT needs to be put on a more financially sustainable footing. I expect the IMF to develop a set of options to do so, and my team at Treasury is ready to serve as a partner for the IMF as it considers the options at its disposal, like using the internally generated resources of the fund to support the PRGT subsidy account. Second, I will continue to build momentum for our collective initiative to evolve the multilateral development banks. Ahead of last year's annual meetings, I joined with other shareholders to call for an evolution of the MDB system to address global challenges with the speed and scale required. Over the past few months, our broad coalition has worked with the World Bank management to make significant changes. For example, the World Bank is updating its mission statement and refreshing its operating model. And we're working with the World Bank and the regional development banks to implement measures that will more efficiently leverage the resources they have. Our reforms to the World Bank's balance sheet will responsibly unlock as much as $50 billion in additional lending capacity over the next decade. As part of our evolution agenda, we estimate that the MDBs as a system could unlock $200 billion over the next decade just from the measures already being implemented or under deliberation. And there is potential for even more if the MDBs undertake some of the longer-term and more complex recommendations in the G20 Capital Adequacy Framework report. This is $200 billion more in funding that we can use to advance key global priorities, spurring economic growth and reducing poverty, fighting climate change, and promoting human development. During the Paris summit last month, I had an opportunity to strengthen our coalition of supporters for this initiative. We were pleased to hear the new World Bank President, Ajay Banga, announce a package of measures to assist countries in responding to natural disasters, including pausing debt payments. This is particularly important for countries that are especially vulnerable to climate shocks. And we now need to translate this momentum into further action. There are a few specific priorities that we should work on next. First, I'll work with the World Bank and my counterparts to push for a framework and principles for the targeted use of concessional financing for global challenges. This will enable us to deploy concessional financing toward areas of greatest impact. I'll also be talking to counterparts about ideas for how we can help boost the World Bank's concessional lending for both low-income countries and to support IBRD borrowers as they tackle global challenges like climate. Second, the World Bank should create a mechanism to allocate additional resources to countries that seek bank financing to combat global challenges. Third, we would like to see the bank explore options for lending to sub-sovereign and super-sovereign actors like COVAX to address global challenges. Finally, I look forward to collaborating with my counterparts to streamline the climate finance architecture, a significant source of concessional finance, and to make sure the development banks and specialized funds work together to deliver maximum impact. We need the whole system to become more effective and efficient. As we take these actions, we recognize that public financing alone cannot fully deliver on the massive challenges that face us. That's why it's essential that development banks ramp up their private capital mobilization rates. I know this is an imperative shared by President Bonga and the leaders of many other MDBs, and I encourage them to continue to prioritize these efforts. The recently released G20 MDB Experts Group report is a useful input to the agenda I described. I'm pleased with the report's emphasis on incorporating global public goods into the mandates of the MDBs, along with its focus on making the operational model of the institutions more responsive through changes to culture, incentives, and risk appetite. I also share the call for much more ambitious private sector engagement and efforts to make the whole system work better together. Finally, I support the request for swift implementation of the capital adequacy framework recommendations. But I believe we should only explore capital increases after considering the reforms that I laid out, along with those in the report. We should build better banks, not just bigger ones. Over the next few months, we will remain intently focused on the delivery of these reforms in close collaboration with other shareholders. Another key priority this week is to redouble our support for Ukraine as it continues to defend itself against Russia's illegal and unprovoked attack. My visit to Kyiv earlier this year still deeply moves me to this day. Seeing the bravery and the resilience of the Ukrainian people up close impacted me personally. During the trip, I also saw the massive difference that foreign assistance is making to the lives of Ukrainian civilians and the Ukrainian military's front lines. As I've said, ending this war is first and foremost a moral imperative, but it's also the single best thing we can do for the global economy. Let me be clear, our coalition's support for Ukraine is unequivocal. The United States will stand with Ukraine for as long as it takes, and I know the allies and partners in our coalition will do so as well. Budgetary support is critical to Ukraine's resistance, and the United States is proud to be part of a broad coalition that has provided such support to Ukraine. By helping keep the economy and the government running, we're giving Ukraine the support it needs so it can fight for freedom and its sovereignty. We will also continue to cut off Russia's access to military equipment and technologies that it needs to wage war against Ukraine. One of our core goals this year is to combat Russia's efforts to evade our sanctions. Our coalition is building on the actions we've taken in recent months to crack down on these efforts. Finally, I want to briefly mention the work we're doing to make our international tax system fairer and fit for purpose in the 21st century. A little less than 2 years ago, we reached an historic agreement on a two-pillar solution to address the tax challenges of our digitalized and globalized economies. We remain committed to implementing that agreement. Today, many countries are moving forward to implement the global minimum tax on the earnings of large multinationals, which will end the race to the bottom on corporate tax rates. It will enable our government and others to implement tax systems that ensure multinationals pay their fair share and compete on a level playing field with small businesses. We continue to work together in the inclusive framework to ensure consistent implementation, and we expect additional published guidance soon. The two-pillar solution also reforms the allocation of taxing rights. It provides greater taxing rights to market jurisdictions in order to better reflect modern economic realities. We're very close to reaching agreement on the technical details of that reallocation, and we're committed to doing so soon. And with that, let me stop, and I'd be happy to take your questions.
Secretary Yellen. You mentioned your trip to Beijing. And indeed, by many reports, that trip seems to have gone very well, with the Chinese engaging substantively on many issues. They're receiving John Kerry today in Beijing, and also on the debt relief front, that shows some progress by finally agreeing to the restructuring agreement in principle, at least on Zambia. Is it time, in your view, for the U.S. to perhaps step forward with some response of its own? Thank you. Either perhaps in the way it designs the investment restrictions it's planning, or perhaps by eliminating some of the Trump-era tariffs. The Biden administration has been reviewing those for almost 2.5 years with no resolution, which seems like enough time to determine their appropriateness and indeed whether they're beneficial to U.S. consumers and businesses. So is that perhaps something that the U.S. might use to respond with an olive branch of sorts?
Well, it's a valuable suggestion, and it would be useful to look for ways to de-escalate over time. At the moment, with respect to the tariffs, this is something that I discussed with my Chinese counterparts. As you mentioned, we are completing a 4-year review, but I would say that the tariffs were put in place because we had concern with unfair trade practices on China's side, and our concerns with those practices remain. They really have not been addressed, and China put in place retaliatory tariffs of its own. So perhaps over time this is an area where we could make progress, but I would say it's premature to use this as an area for de-escalation, at least at this time.
Next question goes to Andy. Hi, Secretary Yellen. I also have a question on China and the Chinese economy. There's been a sharp slowdown in Chinese exports last month. There's also been a major reduction in the amount of foreign direct investment into China this year. How significant is that to you from the perspective of the global economy? Is that type of slowdown a problem for the global economy, or is this something that maybe is encouraging in terms of your calls for de-risking and friendshoring to see some of those changes?
So de-risking and friendshoring is an important priority for the United States, and it's something that we're promoting here in India, and we will be discussing in Vietnam in the next leg of our trip. But I expect that's something that will take place gradually over time. And with respect to China's economy, the The slowdown in part seems, in addition to exports, to reflect less of a pickup in consumption spending than was anticipated when the COVID lockdowns ended. And, of course, it is significant to the global economy. China is a very substantial importer for many countries around the world. So when Chinese growth slows, it has an impact on growth in many countries, and we are seeing that. So it is something I discussed with Chinese counterparts, discussed what plans they have to take actions to address the weakness in their economy. And I think that they certainly are anxious, at a minimum, to communicate that the business environment in China is open and friendly, and that there's a desire certainly to see foreign investment in China. I met with American businesses who also are eager to be able to invest in China and would like to see an environment where ongoing trade and investment is possible and thrives. And I made clear in my discussions that while we have concerns around national security and human rights, which we certainly will prioritize and not compromise on, there are many areas in which we have trade and investment that are completely uncontroversial and beneficial to both sides.
Next question goes to Deepshika Sikurwar from Economic Times.
Secretary Yellen, this is Deepshika. You've spoken about friendshoring and the fact that India is part of the friendshoring strategy of the United States. What is your assessment of the progress of the strategy so far?
So friendshoring is an important foundation of our approach to increasing the resilience of our supply chains, and we see India as an indispensable partner in that, and more broadly. I hope to use this trip to deepen what is already a very significant relationship with respect to friendshoring that the United States and India have. Our ties continue to deepen. The United States is India's largest export market. Our bilateral trade last year reached an all-time high, and we are looking to see it grow even more. Friendshoring will also be a significant area for discussion in the next portion of our trip in Vietnam. So I aim to strengthen our bilateral economic ties, and behavior by the private sector is really an important part of friendshoring, and we are seeing continued announcements of investments in India by private firms that see India as an excellent place to be producing and exporting to the United States.
Next question goes to Peter Martell with AFP.
Hi, Secretary Yellen. In relation to aid to Ukraine, are sort of concerns of the Global South legitimate that further aid going towards Ukraine will mean less aid and support to them?
So it is true that we are providing substantial aid to Ukraine, which we feel is necessary and fully warranted. But I would push back on the idea that there is a trade-off between our support for Ukraine and our support for the South. We have a broad agenda of measures to address the problems of the South, and there's a great deal of momentum in our actions to promote better outcomes and to address the needs of the South. I would say, as I've said this previously, that perhaps the single most important thing we can do for the globe as a whole, including the South, is to end the war in Ukraine, which is imposing great costs. But I would simply point to, beyond that, our work on tackling debt distress that I discussed in my opening remarks, the work that we're doing on MDB evolution, including global challenges like climate pandemics and conflict and fragility that are linked to resilient development, and the resources that we're working with the MDBs to unlock, which, as I said, could amount to $200 billion in additional lending over the next decade. We have stepped up our pledges recently to the multilateral development banks' concessional windows, and we're working to boost access to concessional resources, both to support investments to tackle global challenges, but also to address the needs of low-income people. I mentioned in my remarks the IMF's Poverty Reduction and Growth Trust, which provides important support, and we're working to shore up the resources so it can continue its lending. And previously I've discussed food, and we've stepped up and provided a good deal of support to address the food challenges in developing countries. Private capital mobilization is another area where our efforts are considerable to try to provide greater resources.
Last question goes to Rashid Luthra with CNBC.
Secretary Yellen, I would just want to ask you about the conversations you've had with China. How relevant are those discussions, especially with regard to coercive economic practices, the messages that you gave to the Chinese leadership, important in the context of G20 deliberations? What is the message that you take from China that you would be giving out here at the G20, also to your Indian counterparts?
So one of the key messages that I conveyed to China is that in addition to honestly and candidly expressing and discussing the concerns that each of us have about our bilateral involvement relationship, that we have a common obligation to address the needs of the global economy. And indeed, it's hard to imagine that there can be progress in addressing global challenges unless the United States and China cooperate. We discussed specifically in that context debt and climate change. And I would note that in the case of debt, we have seen recent progress. I mentioned the case of Zambia, which we are glad to see progress on. It took too long to achieve, but there is at least signs of progress that we can work together and with the global community, with the G20, to make faster progress there. And we're already working constructively with China in the G20 context on climate change. We co-chair a work group on a task force on sustainable development, and we've cooperated well. And I see ways, and I believe they could as well, to expand our cooperation on this key challenge. So this is an area that I think is very promising in terms of collaboration, that we shouldn't let our differences stand in the way of cooperating on the G20 set of programs.